If you're wondering, Kyle, when alt season? Guys, I got the answer for you. It's literally exploding right now. It's just not where you think. The real winners are literally being handpicked by insiders, Wall Street elites, and crypto titans. They're deciding which tokens will lead the next rally by throwing more money than retail ever could. With a snap of their fingers, billions flow into chosen champions through public treasury deals. And the stocks that play this kind of game, well guys, they're putting up the kind of altcoin gains that everyone's been waiting for. You ever wonder how MicroStrategy managed to do 30x while Bitcoin only did 11x in the same time period? Well, it's because Wall Street created their own version of Altseason. Yeah, trust me guys, this is what everyone's talking about in my closed private groups. It's one that lets these companies supercharge their exposure and multiply their returns. All you need to do is watch their moves. Ride the whales and you'll give yourself a real shot at the biggest gains of the cycle. If you ignore these signals, you'll end up as exit liquidity for somebody else. Today, I'm breaking down exactly how this playbook works, so you can catch the moves in real time and put yourself in a position for the kind of altcoin season most people only dreamed about. But before I break down how Wall Street insiders are choosing the winners, let's set the stage, because what's happening in Washington right now could be the most important crypto development of the entire cycle. This year, the United States set out to become the crypto capital of the world. And the pace hasn't slowed down for a single week. Within days of taking office, Trump signed an executive order that instantly reversed the previous era's approach, which was Operation Choke Point 2.0. We all felt it incredibly painfully. The White House has banned any plans for a US central bank digital currency and set up the president's working group on digital asset markets, and ordered every agency to re-examine their crypto policies from top to bottom. Just a few weeks later, the president issued a second executive order establishing a strategic Bitcoin reserve, meaning for the first time, the US Treasury is officially holding and protecting Bitcoin as a long-term national asset. The same executive order created also the digital asset stockpile for other tokens that were seized or acquired by the government, while making it clear that the new stockpile purchases would only happen through forfeiture or penalties, not through direct government accumulation. These executive orders began the biggest pivot in US crypto policy since the industry had begun. But that was just the start. Changes beyond the White House started taking effect. Every regulator and agency fell under orders to create clear pro-innovation rules designed to let real capital flow into digital assets and let the best projects thrive. Congress is still wrestling with the details around DeFi, stablecoins, and the right balance of oversight. But the tone has shifted. Policymakers are now openly discussing supporting American digital asset leadership, rather than merely reining in risk. And this shift has already opened doors for funds, treasuries, and new trading vehicles that would not have been possible just last year. The big milestone lands tomorrow. The President's Working Group 180-day digital asset report. This report will recommend a national framework for stablecoins, clear guidelines for digital asset market structure, and explicit protections for innovation. Most importantly, it could actually contain details about how the US government would accumulate Bitcoin or other digital assets based on the executive order. Everyone in the industry is closely watching to see how these rules land, as this report could set the tone for capital rotation and treasury strategy throughout the rest of the year and beyond. How this regulatory pivot lands will shape where the capital flows, which assets get the spotlight, and who stands to gain the most in this cycle. Meanwhile, the SEC's process for approving new ETFs and public investment products is as slow and methodical as ever, at least for now. The Truth Social Bitcoin ETF, Grayscale's Solana Trust conversion, and the multi-asset products like Bitwise 10 Crypto Index ETF have all seen their decisions pushed back. Even with a more pro-crypto tone at the top, actual approvals for new products are rare. And that caution has created a wide open lane for crypto treasury-backed public companies to move quickly, lock in hundreds of millions, in some cases billions of dollars, load up with token supplies, and channel all that firepower at the chosen champion altcoins of this cycle. That's why I'm so focused on them right now and why these deals should be on your radar too. Because here's the part most people are missing. Some of these new crypto stocks have been actually outpacing the underlying tokens by a long shot. Just check this out. Here's a table with a bunch of altcoins and the treasury companies loading them up. Look at the price action after a treasury company makes their move. On average, the altcoins themselves barely budge. Some even go in the red. Over 30 days, the average altcoin is basically flat, sometimes even down. But now look at the stocks. The same news sends those treasury stocks vertical. We're talking about an average of 162% in the first day alone, and the median is still 38% even a week out. The average stock is up over 185%. That's a complete game changer. You want altcoin season gains? Lately, they're not happening on the token chart. They're happening on the stock chart. SharpLink Gaming, for example, 433% in a day. HYLQ, 741%. Even names like DeFi Development and Bitmine, you see triple and quadruple digit returns within weeks. It's wild. Sure, altcoins can move, but the data doesn't lie. These altcoin treasury stocks are showing the kind of explosive, instant alt season price action that people have been waiting for. But here's a clear warning. They also come with their own risks, which we will get into later on in the show. Do you want to buy the next MicroStrategy before it does a 30x? If you want to know why everyone is suddenly obsessed with these new crypto stocks, it comes down to one thing. The upside can be way bigger and way faster than just holding tokens alone. MicroStrategy is the poster child for this. When MSTR started, its stock was just $13. Bitcoin was $11,000. And in just 6 months, Bitcoin did an 11x, but MicroStrategy stock did a 30x. Why? Because every time the stock traded above the net asset value, Saylor raised even more money, bought more Bitcoin per share, and the market kept rewarding him for stacking more and more. That's how a simple bet on Bitcoin turned into a stock market rocket ship, outpacing even the token itself. In the early days, the formula was simple. Raise capital, buy Bitcoin, and let volatility and network effect do the rest. Saylor took the playbook mainstream, raised billions, bought Bitcoin, and used Wall Street's tools to multiply those gains. Now, the same thing is happening with altcoins. As these new companies look to outperform even the underlying tokens, just like MicroStrategy did with Bitcoin. But this is just the start. The competition is heating up fast, and the real battle for alt season is playing out right now. The real arms race shaping this public alt season is happening as public companies and top crypto teams rush to launch massive token treasuries, zeroing in on the next wave of infrastructure assets. And this arms race is only just starting to heat up. Billionaire investor Bill Miller of Miller Value Partners laid it out in a way that says it all. Check this out.
It's my take that in 20 to 30 years, every company might be a Bitcoin treasury company. And the reason for that is what I just mentioned. The underlying protocol for what we're representing as value is much more stable in Bitcoin than it is with fiat technologies. So, we own Strategy. You look at the deal that Michael just did with STRC, many, many times oversubscribed. And what I think is likely to happen moving forward is people are going to look around and the bond managers that are buying the Bitcoin-related bonds are going to outperform the ones that don't. And the equity fund managers that buy Bitcoin-related stuff are going to outperform the ones that don't. And people are going to keep looking around and going, how do I do that? Oh, I buy stuff that's tied to Bitcoin. And so, and then they're going to actually do work on it, which most people still haven't actually done. And it's just going to snowball downhill, which is what we've seen for the past 16 years.
And I got to agree with him. The way the world is shaping up, we could really see every major company stacking Bitcoin on their balance sheet before too long. At least Bitcoin, maybe ETH, and maybe others. But now Pandora's box has opened up to more than just Bitcoin. Over 30 new public company vehicles are now in motion to buy things like BNB, Hype, Sui, and Tron. You guys wonder why BNB has been actually pumping lately? Well, here you go. CEA Industries, backed by 10x Capital and YZI Labs, is executing a $500 million deal, potentially up to $1.25 billion, to build the world's largest public BNB treasury, traded on NASDAQ under the ticker VAPE. This is a who's who deal, bringing in over 140 institutional and crypto native investors, including Pantera, GSR, Arlington Capital, Blockchain.com, the founders of Bitfury, and many, many more. And that's only the start, guys. WindTree Therapeutics has also announced a $200 million BNB treasury strategy, making them the first NASDAQ-traded company to hold BNB directly. Lemonadus, another player, is moving to deploy up to $500 million in BNB. And CZ himself is confirming these fresh BNB treasury deals every week. The numbers are absolutely wild. But the story doesn't stop at BNB. Lions Group is securing a $600 million facility for a hype treasury. And Sonic Biotherapeutics is merging with a Paradigm-backed team to form hyper-liquid strategies, aiming for over $583 million in hype, with more than $300 million in new capital on deck. Just yesterday, guys, we covered NASDAQ-listed Mill City Ventures, locking in $450 million in private placement to buy up SUI. And this was backed up by pretty much every major big VC in the game, including Mike Novogratz, who I'm about to interview, guys, a little bit later today, so stay tuned for that one. Even TRON just went public, just in Sun, on the NASDAQ after reverse merger with SRM Entertainment, making it one of the only crypto-native blockchains now trading on a major US exchange. Justin Sun even rang the NASDAQ opening bell, ding, 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 putting TRON Inc. on the big board, offering institutional investors a brand new way to gain exposure to another major blockchain ecosystem. And the message from Justin to Wall Street, let's just say nobody makes it clear than he himself.
Buy my shitcoin.
Is Tron a valid coin or a shitcoin?
Shitcoin.
Why is it a shitcoin?
I feel more legit than Ethereum. I don't know why.
But it's a shitcoin.
I agree. Buy his shitcoin.
Buy his shitcoin.
Buy it immediately.
Yeah, buy his shitcoin. Why should they buy that shitcoin?
Because it is Ethereum killer.
Now, guys, this was a long time ago, but it's just funny anyway. Justin says buy his shitcoin. And now it's traded on NASDAQ, right? But in all seriousness, are you starting to see the picture? It's a sign that the next phase of crypto adoption will happen in plain sight as tokens, protocols, and founders go directly to Wall Street. Each new public listing channels even more capital into these tokens, pulling supply off the open market and raising the stakes for every project that gets a deal. And guys, in this video later, we're going to answer, is it better to just buy these tokens, or do these crypto stocks actually make sense to invest in themselves as well? But these vehicles solve real pain points for institutional allocators. By wrapping crypto treasuries in equity or fund structures, big money can finally access altcoin and DeFi exposure without dealing with self-custody, KYC issues, or offshore risks. Each time one of these deals closes, it brings a new class of buyers into the market and increases scarcity for everyone else. The next chapter of the bull run is being written by these public company treasuries. The rules have changed. The smart money is watching which tokens are being targeted, how these deals are structured, and what it means for supply, liquidity, and the next rally. So I think the obvious question everyone's probably asking themselves right now is, should I ape every single altcoin treasury or crypto that goes into a public stock vehicle immediately? Well, not so fast, guys. The mechanics driving these public company deals are powerful, but they can cut both ways, and understanding the risks is just as important as spotting the opportunity. Sure, at first glance, it looks like a new infinite money flywheel is running at full speed on the public markets, and it kind of is. We touched on this a bit in yesterday's video about the top Ethereum ETF companies. Check that out if you missed it. But guys, today I want to dive in a little bit deeper to reveal how some of the insiders are using this as a new way to cash out directly on retail's heads. Here's how it works. This is you guys, careful. When a company raises funds, usually through a PIPE, which is a private investment in public equity, or a direct at the market offering, and makes a headline purchase of Bitcoin, ETH, Sol, or the next hottest token, the news hits. The stock price suddenly goes vertical, and suddenly you have a listed company trading far above its value of its token holdings. That's the moment the flywheel kicks into overdrive, because the company's stock price rises above the net asset value. It unlocks even more fundraising opportunities, often at a premium. A new PIPE deal gets announced, even more tokens are bought, and the whole cycle repeats. This is what we call the flywheel. For a while, it can feel unstoppable. Each new headline draws in more capital, and insiders see the premium as free money to keep fueling the machine. But this feedback loop doesn't last forever. As soon as a new PIPE or ATM shares unlock, early investors start to dump. Shares suddenly flood the market and the price can crater overnight. SharpLink and Upexi are just two recent names that saw their stock drop 70% or more the moment the unlocks hit, regardless of what's happening in the underlying token market. Even just take a look at Tom Lee's Bitmine immersion stock. It initially pumped from $4.25 to $135 in under a week. But since then, it's dropped 75% down to just $35. So you can see why this particular one, for example, was so hard to play. It launched at $4.25. You would have been great if you bought it at $4.25. But if you bought it above $35, you're now in the hole. So remember, just because the companies trade on TradFi exchanges, that doesn't make them any safer. This is the new altcoin market that's happening right now. Will it always be like this? I don't know. But right now, we have altcoin season in the stock market, and they're trading just as volatile. The risk isn't just isolated to one or two companies. Across the digital asset treasury sector, stocks are trading at enormous premiums to their net asset value, and others are at risk of falling below asset value entirely if dilution ramps up. The same mechanics that make the flywheel go parabolic can just as quickly flip the other way, trapping latecomers or short-term traders as exit liquidity. So before jumping into these publicly traded stocks, you need to understand the risks involved. They can swing just as wildly as any altcoin. Big moves up, but just as sharp on the way down. Understanding these cycles, the pipe financing, the premium feedback, the unlock mechanics is now absolutely critical for anyone following. This is the foundation for how public company treasuries and capital market vehicles are driving crypto's new arm race. Before I break down whether or not I'll be getting involved with these stocks, just a quick word from today's channel sponsors. I'm very thankful for them. Super high quality. Check this out. Have you guys ever felt crypto rich, but bank account tells a different story? That's me. Forever, right? My portfolio looked great, but when it came time to pay for dinner, flights, or just a coffee, moving money around was always a hassle. Then I found Xapo. With the Xapo card, I can load it up with Bitcoin or stable coins and spend them anywhere Visa and MasterCard is accepted. You also get this fancy black metal card, which makes you look like a baller. And you get 1% cash back on Bitcoin for your purchases, which is amazing. Plus, if you sign up with my referral link and become a member, you can save $500. And if you're done feeling crypto rich but cash poor, try Xapo. Hit the link in the description below to get your Xapo card and unlock crypto for real life today. And did you guys know that you can hold Bitcoin in your IRA or 401k and watch it grow tax-free? Bitcoin IRA is America's first and most trusted crypto retirement platform used by over 100,000 people. It's fully regulated, with secure, insured custody, 24/7 support. Rolling over your old 401k or IRA just takes a few clicks and you get all the upside of Bitcoin without the tax headaches. Stop letting your dollars lose value while crypto leaves traditional funds behind. If you want your retirement to work harder for you, Bitcoin IRA is a move. And if you guys didn't see my video with the founder, make sure that you watch it because it gives you all the info that you need. And if you're interested in using Bitcoin and crypto to retire. All right, guys, thanks again to the amazing sponsors. And now back to the show. So here's the real question. Are these new crypto stocks actually worth your time? Or are they just another distraction? Stocks like MicroStrategy and Bitmine have absolutely exploded, sometimes doing 2x, 3x, even 6x the gains of just holding the underlying tokens. So in these cases, it was definitely worth it. You've seen MicroStrategy turn an 11x move in Bitcoin into a 30x run for the stock. Bitmine did something similar with Ethereum. The net asset value jumped from $265 million to $2.7 billion in under 3 weeks. Not because ETH mooned, but because the fresh capital kept piling in and the premium shot through the roof. If you catch these cycles early, you can compound your position using the market's money, riding the premium and the flywheel as new investors bid up the stock. That's the alpha, a shot at outpacing spot prices by a mile, as long as you understand the risks. This is like, in a way, a meme coin market, kind of. It's not really, but you know what I mean? The volatility is there. But, and it's a big but, the risks can be brutal. Those same stocks can crash back to earth fast. If the premium disappears or insiders start dumping, the stock price can drop hard, even if the token price barely moves. You can end up stuck in a drifting stock, unable to get out, while your favorite altcoin is ripping on its own. Most importantly, if you buy late after the run-up, you're probably just exit liquidity for the early crowd. So is it worth it? Well, guys, here's the truth. If you want leverage and you know how to spot early momentum, these stocks can offer way bigger upside than the spot price itself, especially in a bull market. But if you're late or you're not willing to track the premiums, you could lose just as quickly, sometimes even faster. So you need to pay attention to these kind of things. At the end of the day, you got to decide, do these crypto stocks deserve a spot in your strategy? Or is it better just to stack a spot and ride the next wave of the altcoin season? I'll keep tracking the numbers, guys, breaking down the trends and giving you the honest take so you can make that call yourself. But the actual altcoins getting the treasury companies, I would absolutely pile into these. They might not rip right away like treasury companies, but I'm betting these will be big winners this cycle. And that's where the capital and attention is rotating to. Because if these treasury companies keep buying these altcoins, they're likely to get attention as well. And so as soon as we see the crypto market altcoins come roaring back, these things are likely to probably run the hardest, just showing more media attention, more attention in general. Attention equals capital rotation. Personally, I'm still on the fence. I'm being offered these deals early as like an insider every day, and I still don't know if I'm going to take them or not. But the numbers are insane, but so is the risk. And that's why I'm watching these moves, seeing if the edge is still there and deciding if it's worth my time. But if you're ready to jump into the altcoin treasury Wild West, there's 2 metrics that'll help you make good financial decisions about which stocks to buy, or if you're better off just sticking to tokens. If you want the playbook to know which treasury companies are worth buying, it's all about NAV, or net asset value, or simply the amount of tokens the company holds on its balance sheet. This is the scoreboard everyone's watching. NAV equals net asset value. It's the total dollar value of all the crypto a company holds, minus its debts, divided by every share. So NAV per share is what you'd get right now if the company sold everything right now and paid you your slice. The magic comes when the stock trades above NAV. The formula is simple. MNAV equals share price divided by NAV per share. If the share price is $40, NAV per share is 20. That's a MNAV of 2. Investors are literally paying double the crypto value per share. Why would anyone do that? Well, this is the same question I was originally asking. Because just like with MicroStrategy, people are betting management will keep raising money at a premium, stacking more tokens, and compounding everyone's gains, using the stock market's hunger to do what you couldn't do alone. Bitmain just pulled this off with Ethereum. Their NAV jumped from 265 million to 2.7 billion in under just 3 weeks. Not because ETH did a 10x, but because people lined up to buy the new shares at a huge premium. Each time, existing holders got a bigger and bigger piece of the pie, all paid for by fresh capital flooding in. It's a cheat code. While the premium holds, you're not just holding ETH or BTC, you're compounding your stack with other people's money. Get in early, and every new round of buying lifts your NAV per share higher and higher. It does seem a little bit Ponzi-like on the surface, I'll tell you that. But you got to respect the risks. If the hype fades and the stock falls back to NAV, if MNAV drops to 1, that accretive magic shuts off overnight. No more free ETH per share. And if sentiment really turns, the leverage can hit just as hard on the way down. You could end up stuck holding shares that drift or lose value, even if the tokens themselves stay strong. And here's the big distinction. With these new altcoin treasury companies, there's no margin call or forced selling if the stock price tanks. They're set up as pure equity, not debt. But if the stock sits at a deep discount to NAV for too long, it gets much harder for the company to raise more money. And that's when things can start to stall or even unwind. So always check. Are you buying the real value of the tokens or just paying a premium for excitement? The upside is real if you catch the wave early. But when the premium unwinds, the drop can be brutal, even if the crypto never moves itself. And for ETH, Sol, SUI, and the new wave of altcoins and their treasury companies, the potential for big moves is even higher. The market cap is way smaller on these alts. So just a fraction of the capital that would barely move Bitcoin can actually send these stocks and their altcoins vertical. But even this approach isn't without risk. As I mentioned earlier, first you have to focus on the MNAV. But on top of that, these new treasuries have to manage yield and liquidity at the same time. Staking contracts can have days-long queues to unstake, And more complex yield strategies like restaking and DeFi-based products come with smart contract security concerns. The playbook is more dynamic, but it's also more exposed to risk. Every treasury manager has to balance staking rewards, operational cash flow, and know that when the market turns, liquidity can dry up and prices can fall much faster than Bitcoin. As analysts at Bernstein point out, this model requires real asset liability management, constant monitoring of smart contract risk, and sharp awareness of unstaking timelines. The entire space is learning from these examples. Saylor and the OG Bitcoin treasuries stay laser focused on liquidity and conservative debt strategies, while the new generation of ETH and altcoin treasuries are pushing for yield, innovation, and a new set of returns. Each approach has its challenges, so we'll get to see firsthand which strategies actually hold up when the market gets tested. What could be an absolutely brutal altcoin bear market is seeing these companies die and them having to go bankrupt and selling off their treasuries and just absolutely crushing the price. This is a real thing. This is probably how the altcoin bear market gets started, is these treasury companies. But the thing is like, can you make money on them right now? That's the thing, right? I don't know. Because after 13 years in crypto, launching 2 projects, building my own VC, and deploying over $100 million across 250 startups, I've learned that being obsessed, putting in real research, and building conviction, while always questioning yourself and staying curious about what's next, is what leads to the real success in this game. My strategy has been to do my homework first, then sit tight and hodl my best bags until my signal flips. Watching for altcoin outperformance in periods of Bitcoin weakness and rotating only when the risk and opportunity make sense. Every supercycle ends, and this one will be no different. If you want to see every new rotation as it happens and know when to get aggressive or step back, make sure you subscribe, guys, and have those notifications turned on. This is how you stay early, stay informed, and stay ahead of the next opportunity. If you want to hear more about why I think tomorrow will likely be a big day for the crypto market, try watching this video. And until next time, guys, stay sharp, stack your sats, and some ETH, and I'll catch you next time. See ya.